I think actually Alphabet's a good, first company to kind of go on deck ahead of some of the other big bellwethers next week. And the reason I say that is because they really have two key segments that you can kind of look at relative to the others, and that is their cloud business, and then you have the digital ad business, right? So on the cloud side of things, it's going to have a lot at stake for a company like an Amazon, and then when you look at the digital ad side of things, it's obviously going to have huge repercussions out there for Meta and how that stock performs. But when we think about what the key metrics we're looking out for on the cloud side of things, I think first and foremost we're looking at high 20s growth for Q1. Specifically, we're looking at about 28% growth. We think that's a number that's more than attainable. We think that the number for the rest of the year should continue to stay in the 25 to 30% range in terms of cloud growth. Clearly, they're going to have Blackwell ramping up here in the first half of the year, and that's going to help them in terms of sustaining those growth rates. I think also when you look at the digital ads side of things, that's probably the more unknown right now for investors because of the uncertainty related to some of the tariffs, the macro uncertainty. What is enterprise spend going to look like here over the next couple of quarters? Clearly we've seen some uncertainty related to some of the China retail spend here in the U.S., the likes of Shein and Temu. So we kind of ratcheted our numbers down slightly on the digital ad side of things, more in Q2 to Q4. But that said, we're looking for high single-digit growth on digital ad for both kind of search as well as YouTube here in Q1.
Okay, so let's bring all of this in, because anytime I go to Google and I do what I used to call a search, I'm thinking, well, I can do this on Perplexity. And I know that Google has its tentacles, and I'm going to use the word tentacles, in different AI ventures. But Gemini, where does Gemini feature into this? And you're expecting a huge CapEx number as they build out AI. Is that correct?
Yeah, no, absolutely. So when you think about Gemini, I guess 2.0, right, which was launched in December, that's essentially their next generation of models that's kind of flowing into the ecosystem. And what what we call 2025 and 2026 is we think that those are going to be the years of agentic AI. And when you think about Gemini 2.0, it's essentially going to drive greater reasoning capabilities for these next gen models. So our view is you're going to get, it requires a lot more compute, as Jensen Huang has stated repeatedly. And that's going to help kind of, we think, drive demand on the cloud side of things. And, when you think also about AI and, their ecosystem out there, there's going to be a lot of attention in something called AI overviews as we kind of go into the print here in Q1, how they're monetizing it. Are they successfully monetizing it? We're going to want to hear as much as we can about AI overviews and what that's doing to the search business out there, because the whole point of it is, hey, listen, it could drive upside in terms of the pricing side of things, but it remains to be seen how much momentum and success we're seeing from AI overviews.
So you spend your day-to-day studying this. I'm a novice, so let me ask you, how do you monetize Gemini if you're Google? Because, for instance, my company where I work 40 hours a week, we have a ChatGPT Pro account, and I'm quite impressed. I mean, do they go head-to-head against ChatGPT, that kind of model? Is there another way to monetize this?
I think there are a ton of different ways you can monetize Gemini. But yeah, I mean, the question is right now, post DeepSeek situation, how much are people willing to pay for these models? Are you actually monetizing these type of models? What type of, what are we going to see here over the next couple of quarters? And I think that's something that they're going to need to explain, and we're going to need to see. And I think this is a big question for Alphabet as well as all these other mega hyperscalers out there, given the massive amount that they're spending. You're looking at $75 billion here for Alphabet this year. We want to see signs of kind of, AI revenue, but kind of profitably growing AI, right, in many respects. And it's probably going to take years before we actually kind of see an actual kind of AI profitability really take off. But we need to kind of start seeing some return on those investments. And we need to start, or at the very least, we need to see these companies become a lot more efficient with their capital usage. And if we start seeing that stuff, clearly we think the street will reward Alphabet and others.
So let me ask you from, again, the novice investor standpoint, if I'm listening to that earnings call from Alphabet, and you've just said they're going to have to start answering what is the plan, the strategy to monetize this, and at what point. What I heard you say, if I'm understanding correctly, is that it's going to be not next year or the year after. It really is a long play. So are most investors willing to hold on to the Alphabet shares for this to actually become profitable for them when there's so many competitors out there that may get there first?
Well, I'd say the good thing here is the price they're paying for Alphabet is not very extreme, right? I think we're talking about 15 times next year's earnings from our perspective, and you're looking actually closer to about 14 times on a net cash basis. So you're not paying very much for this company, as well as a number of the other hyperscalers out there, given the recent pullback, especially that we've seen in the shares. So, a lot of the hype that we've seen on the AI side of things here over the last 2 years, and we think somewhat warranted, it's clearly kind of pulled in significantly. So from a pricing perspective, if you're an investor, I think you get into these names, especially on the scaled back side of things. And listen, there's a lot more to the Alphabet story relative to just AI, right? I mean, this is a company where we think they're probably going to announce a new buyback. They're going to probably announce at least a $70 billion buyback plan out there. These hyperscalers or these mega cap companies out there, what's made them great stories here, not only over the last 3 years, but over the last 2 decades, has been their free cash flow generation and their ability to continue to return that cash back to shareholders. So I think that's something that you're going to see here on the call. They're going to defend their stock when they report tomorrow night. And, they're clearly, when you look at this company also on a sum of the parts analysis, right, you start thinking about things like Waymo, which is going to ramp here over the next 2 years into a ton of new markets. When you start thinking about the upside to YouTube, and you also look at just Netflix just reporting and the stickiness that YouTube is going to have on their subscription offerings. Alphabet's got 7 platforms outside of search that have over 2 billion users attached to it. So this is a massive ecosystem that's not just tethered to search. And when you look at the valuation of this stock, we think we think you're getting a lot more than just AI for Alphabet.
Real quick, the metric that I think greedy investors like myself, 70 billion is the number you're looking for in the buyback for 2025, correct?
Yes.
And then let me ask you, you talk about the other platforms. I'm going to go to YouTube. I can't imagine an hour that doesn't go by in which millions of us are not somehow connected to YouTube, whether it's making our living by doing something with YouTube or utilizing what's on YouTube. Of their different platforms, is that the key one to pay attention to for growth?
I mean, that's a good one. I mean, outside of the cloud business, I would say you want to keep your eye on YouTube. Both on their ad side of things as well as on the subscription side of things, right? So we want to see what they're saying on both sides, but and clearly the bigger risk is on the ad-based side of things. But absolutely, that has been kind of it's a business that's seen some significant growth deceleration here over the last 4 quarters. They're facing some more difficult comps out there, but nonetheless, it's a business that's going to continue to grow. We think at the very least at a high single digit to low double digit pace here over the next couple of years.